EOG resources. This is, once again, like I've always said and have been buying, that this EOG is the leader. It is the leader in the DXE. And why do I say that? As I go through them, we talked about where QE3 may or may not come in, but it did. And our bull, our new bull, we had a nice correction here, but EOG is always, for calendar years, we have traded this going clear back over here to 1997 when these things came into play over here. We've been in these names for a number of years, all the way up to the highs and great bull rallies. They come down, but I tell you what, they're the best ones because they always bounce as things improve. We are at major triple tops. I will have to inform MMTs that we're short-term overbought. But for calendar 2013, when these things pull back and set up with the massive liquidity that we have by Mr. Bernanke, is that as we hit these major resistance levels, we can get back up here in this name. We will be buying the dips as we started covering the consolidation. Once this thing got above the green line, the 200-week moving average, we have plenty of live videos. Some of them may be on our old site, but we were buying over here now. We were telling people this was the place to be, that these were not intraday trades, but these were going to be longer term trades. And we're back up at multi-year bull highs. This is one of the best ones. When this thing pulls back and wants to test these moving averages, and with the amount of stimuluses that we have in, and fund managers, hedge fund managers, mutual fund managers, they're going to continue to buy this. EOG has marked down its earnings. It knows how to do extremely well. They run the company well. But most importantly is that the pullbacks, we would be buying more. So for new MMTs that do not have positions over here when it was on sale, when it got above the 200-week moving average, this is where the bull started. So let's point this out. The bull started when you got above this green line. And it started right here. And it started on 7/15 of 2012. That's not that long ago. That is not that long ago. And it contributed to lifting the DXE up. It was the leader mover, point mover, dollar price mover, bellwether that helped propel that DXE energy. And it's called, once again, Deutsche Bank Energy. And the reason why we look for other types of trades that are going to do well off of QE3 like it did QE1 and 2, this is the place to be. Now, we are short-term overbought. You want to be careful. For new people, will continue as we move through this calendar year of 2012 and into year 2013. We will buy the dip and sell the rip, and this is the place to be. And they're great traders. They make great gains, and there is various risk management that can be applied. And what do I mean? So you got the bull side working. Then when it wants to pull back in the bull, then you get short and let your longer term position run. Take those gains on the short back to the pullback. Short means that they fall back, they test moving averages, or they set up new bases like right in here on this weekly area. We're going to be watching half of this weekly bar. Right now, we're at the major wall of resistance. In the shorter term, we're a little bit overbought. So as it pulls back from its overbought process, we will be adding and using the option market in EOG. Here is the option chain. We will be in the 2013. We'll be looking at some January trades as well. We'll be looking at some April contracts up and out of the money as well. We'll look at the call side when the calls get really high in price, and we'll buy some of the puts when they have the pullbacks. It's a great place. It's fun to trade these names when they're back in favor. This is the leadership. This is the bull, EOG.